Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we are of course going to be taking a look at Bitcoin's price action, what's been going on most recently and what we think is likely to happen next. As I get into the video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into the video though. So here we have a Bitcoin paired up with USDT. We're using the BitGet spot exchange on the 1 hour time frame, and here we can see smart money concepts combined with Elliott wave theory, my preferred way of analyzing the market. So we can see a couple of things of interest. So let's go ahead and just jump into this, right? So yesterday we were talking about this idea that we've gone and completed a 5-wave move to the downside. This can be a part of either a running flat correction, as in we can just go and move rapidly to the upside. I don't think that's really what's going to unfold though. Or a 5-wave structure that is at the beginning of a new move to the downside, meaning we should still expect another 5-wave move to the downside. So essentially, if I just kind of draw this out, just to kind of recap this a little bit, we have ourselves 5 waves. This can either be a part of a, let me draw it the right way around, can either be a part of an A, B, C running flat correction like this, or alternatively, it can be a part of a 5-3-5, which essentially would look like this. We have a 3-wave correction in between the two of them. Okay, of course we could go down into another 3 up and 5 more down, and 5-3-5-3-5, and of course, you know, we'd look at that if we hit the 1.618 Fibonacci extension level. So considering we kind of have this 5-wave move, really we've only got 2 options. It's either a running flat that's complete and we can now start thinking about moves to the upside, or alternatively this is the A wave out of an ABC structure. Okay, now you can see that yesterday price action moved up and we got rejected on the daily 200 EMA. Okay, not a coincidence. Obviously equilibrium sits a little bit higher. This is always an area of interest to us because this is an area that we might actually have to move up towards in order for us to you know, to kind of see price get rejected from this area. Now, equilibrium is essentially a 50% level between the swing low and the swing high, or what we'd call a discounted area, which you see down here, and a more premium area up here, as in it's expensive to buy Bitcoin up at that high area, and it's a discount if you buy it down here. Okay. Now, looking at our structures, what do we see? Well, we can see that we've completed our three-wave pattern. If I actually put the A wave at the top there, our 3-wave pattern up to that 200 EMA. We can go ahead and do our sense checks on this and we'll see where it lands. It lands just just short of the 1-to-1, coming more in on the 786. So it's a little bit peculiar. It's not terribly unusual, but it's not kind of meeting those typical expectations that you would expect to see. We can then see that we have this correction coming down here. And this one actually looks like it's holding up reasonably well. Let me show you. So in here, and I think actually for this we're probably going to come down to the 5-minute chart just to kind of make this so you guys can see more of what's going on within this little pullback right here. Okay, but what's interesting to me about this move to the downside is the way that we kind of have ourselves what appears to be a 5-wave structured point. So let me show you. Right, so over here we have what would be a wave 1. We move this down to this area just here, and we can see that we hit the 1.618 at this low point. We bounce up and then we move back down again. So to me, this looks like we've completed a 5-wave structure on the 5-minute chart right in here, like this. And it's also, yeah, that would be it there. So we'd have that. Then we bounce up and then we start to move on down again. And we're not really seeing another 5-wave structure. Maybe I'm over-analyzing it on the 5-minute chart here. Maybe I'm not. Maybe we're just seeing ourselves with the beginning of something, you know, more interesting. And the point to this is that if we start with 5 waves, we must end in 5 waves, right? So I'm going to delete that and come back up into our hourly chart here. So what we've really got going on here is what looks like, and you can kind of see it in there a little bit, 1, 2, kind of 3, 4, and 5, right? We move up and then we start to move on down again. My expectations here are that we kind of have to come down to at least this low at 30,120 for a double bottom before we can think about moving up. at least up higher than our swing high that is currently set up here at 30,445, right? So a double bottom should happen either here at 30,120 or anything lower is fine. More specifically, really realistically speaking, we would be more thinking about a move down here, the 29,987 to 30,063. That would be a more realistic kind of targeted range based on an A, B, C structure here. This actually is a correction that we'd then see a move up from, and where we'd then target back to that equilibrium. Because I would look at this as a giant three-wave pattern, and if I bring that on there, let's assume we just kind of have this low range to give ourselves a low target on the higher side of things. We would expect price to kind of move up more towards this range at 30,711 and 30,886 under a three-wave pattern that would look like that. So we can move up into that kind of range as such. So essentially what we've got going on here is a natural correction after an A wave, where we target a little bit further to the downside, but nothing much. And then a move to the upside where we kind of go above equilibrium and we take out that first fair value gap. That first fair value gap is created and is hovering right on there. So you can see actually that our targeted range, this C wave, sits right in between two fair value gaps. We've got one on the low side, okay, that being 30,660 and 30,707, and then you've got the one on the higher side. The higher side one sits at 30,882 and 31,063, and our target happens to fall right slap bang in the middle of those two. So all in all, I think we have a move to the upside to be expected over the next kind of 48 hours or so, but it's going to take some going, I think, to kind of push past some of the resistances. Do expect things to be a little bit volatile. One of the things that you'll notice though is it's staying below 31,510, our five-wave structure start point, our origin here. This essentially means that we're going to then start to potentially see at this C wave high another five-wave move to the downside to essentially complete our larger three-wave pattern that is an A, B, C. Okay, so hopefully that makes a lot of sense to people. Obviously, we are talking of the 1 hour time frame. Things on this time frame are really small movements, micro movements. They're not really going to be making big swings in the market or anything like that. But if you're a leverage-based trader, then you're going to be able to kind of take advantage of a potential 4% move on Bitcoin, which could be quite sizable if you're using a decent amount of leverage and all of that kind of stuff. But obviously, leverage is a high-risk game, so you need to make sure you know what you're doing. And if you are a leverage-based trader, have you checked out BitGet yet? The affiliate link is in the description down below. It's the place that I do all of my leverage-based trading, and you get some fantastic sign-up rewards up to $8,000 if you do use that affiliate link in the description down below. So why not check it out? It's always great to have access to another platform. If you haven't yet checked out BitGet, check it out. So that's kind of where the hourly chart sits, right? So we can map that out. We kind of know and what our expectations are. We're going to go down, we're going to go up, then we're going to go down again. And it can be confusing for a lot of retail investors who are not familiar with charting, and they just think that they can draw a trend line and everything's going to obey the rules of that trend line. And for the most part, that's not really what's going on here at all. We have psychology that plays a part into everything that is going on. Where are people buying? Where are people selling? And all those kind of things. It's probably worth noting as well, on this 1 hour chart, we also are in a bearish state of play. This is apparent right here and was changed over here when we got that one breaking on the 6th of July, right? So we know that ultimately we've just been ranging in this sideways market for quite some time. We're in a bearish state of play at the moment. We have a small move to the upside to be expected, but essentially we are looking at a move to the downside. And essentially that is where Bitcoin sits right now. But that does not distract from the bigger macro. The macro is actually in a reasonable position where we are still targeting out 35,000, but it's going to take weeks to play that part out. There's a difference between the hourly chart, where I'm saying things are likely to kind of play out over the next couple of days, versus that's going to take weeks to potentially months to play out. Okay, so I do see a move up towards $35,000, which is the CME gap on Bitcoin. And once complete, I expect a breakdown from them. But we'll see how things play out, whether or not we just move down to $20,000 CME, or whether we can actually get the momentum behind us and gear up for the $35,000 CME gap. Let me know what your thoughts are in the comments down below. I think I'm going to leave the video right there. Just keep it nice and brief and on point. If you found it useful, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord. Links in the description below. And if you're looking to join the family and become a member, why not check out membership.𝗕𝗘𝗪𝗏𝗂𝗋𝗓 link is also in the description below. Some fantastic benefits for our members are found there. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.